Question 1. Which of the following is true regarding high-deductible health plans? They typically have low premiums and higher out-of-pocket costs but are eligible for health savings accounts (HSAS). B. They offer coverage only for catastrophic events with no coverage for preventive services. C. They are only available to individuals over the age of 65. D. They require an extensive pre-authorization process for all medical procedures. Answer A. Explanation. High-deductible health plans are designed with higher deductibles and lower premiums compared to traditional health insurance plans. They are eligible for use with health savings accounts (HSAS), allowing individuals to save tax-free money for healthcare expenses. This makes them a preferred choice for those who want to save on premiums while still covering major medical costs. While preventive services may be covered without reaching the deductible, in some plans are primarily characterized by their high deductibles. Question 2. Mr. Carter, a 45-year-old self-employed individual, is considering enrolling in the health insurance marketplace. He is uncertain whether his income qualifies him for the Advanced Premium Tax Credit Act. Based on the information provided, what should Mr. Carter do? A. He should consult with a licensed insurance agent to determine his eligibility for ACT. B. He should not worry about the ACT since the marketplace will automatically apply it based on his age. C. He should choose the least expensive plan available and assume he qualifies for ACT. D. He should contact the insurer directly and ask them to provide the APC eligibility criteria. Answer A. Explanation. The Advanced Premium Tax Credit Act is a federal subsidy provided to individuals and families purchasing health insurance through the health insurance marketplace. It is based on factors such as income, household size, and the federal poverty level (FPL). Mr. Carter, as a self-employed individual, will need to verify his income to determine eligibility. Consulting with a licensed insurance agent or using the online tools provided by the marketplace will help him navigate the process and apply for the subsidy accurately. It is not automatic, and simply assuming eligibility could lead to unexpected costs or penalties. Question 3. Which of the following is true regarding Medicaid eligibility in South Dakota? A. Medicaid eligibility is limited to children under the age of 18 and pregnant women only. B. Medicaid eligibility in South Dakota does not cover low-income adults without children. C. Medicaid eligibility is based solely on an individual's income with no other factors considered. D. Medicaid eligibility in South Dakota includes expanded coverage for low-income adults as part of Medicaid expansion. Answer D. Explanation. South Dakota expanded Medicaid under the Affordable Care Act to include low-income adults. This means that adults without children, as well as families with children, can qualify for Medicaid based on their income level within certain thresholds. Eligibility is determined by both income and other factors, including family size and age. Therefore, the state's Medicaid program is no longer limited to children or pregnant women and now covers a broader range of low-income individuals, including those who previously wouldn't have qualified for Medicaid. Question 4. Which of the following is true regarding Medicare Part C, also known as Medicare Advantage plans? A. Medicare Advantage plans are only available to individuals who have enrolled in Medicare Part and Part B. B. Medicare Advantage plans provide coverage for prescription drugs, but they do not cover hospital stays. C. These plans must be purchased through the federal government and are not offered by private insurance companies. D. Medicare Advantage plans offer additional benefits beyond what original Medicare covers, such as dental and vision services. Answer D. Explanation. Medicare Part C, also known as Medicare Advantage, is an alternative to original Medicare Part and Part B that is offered by private insurance companies approved by Medicare. These plans must provide at least the same level of coverage as original Medicare, but they often include additional benefits such as dental, vision, hearing, and prescription drug coverage. Medicare Advantage plans can also offer extra benefits not covered by Part A or Part B, making them a popular choice for many beneficiaries. Question 5. Under the Affordable Care Act, which of the following is an essential health benefit that must be covered by all marketplace health plans? A. Cosmetic surgery. B. Weight loss surgery. C. Maternity and newborn care. D. Acupuncture. Answer C. Explanation. The Affordable Care Act mandates that certain essential health benefits must be covered by all health insurance plans offered through the marketplace. Maternity and newborn care is one of the 10 essential health benefits required under the ACA. This ensures that pregnant women and newborns receive necessary health care coverage. Other benefits like cosmetic surgery or weight loss surgery are not mandatory essential benefits, although they may be covered under specific circumstances or with additional riders or plans. Question 6. MS Williams has been diagnosed with a chronic condition and has a high-cost prescription drug regimen. She wants to ensure her Medicare coverage includes prescription drugs. Which Medicare plan should MS Williams enroll in to ensure coverage for her medications? A. Medicare Part A. B. Medicare Part B. C. Medicare Part D. D. Medicare Part C. Answer. C. Explanation. Medicare Part D provides prescription drug coverage for those enrolled in Medicare. Part D helps pay for prescription medications and is essential for beneficiaries with chronic conditions or high-cost medications. Part A covers hospital stays, Part B covers medical services and outpatient care, and Part C, Medicare Advantage, often includes prescription drug coverage as part of the plan. However, for standalone drug coverage, Medicare Part D is the required option. Question 7. Mr. Thompson is currently enrolled in a POP through his employer, but he is considering switching to a POS plan. Which of the following is a key difference between a PO and a POS plan that Mr. Thompson should consider? A. A POPN requires referrals for specialist visits while a POS plan does not. B. A POS plan allows more flexibility in choosing out-of-network providers compared to a PSC. A POPN generally provides more coverage for out-of-network services than a POS plan. D. A POS plan covers prescription drugs, but a POPN does not. Answer. C. Explanation. The primary difference between EPO and POS plans lies in the level of coverage and restrictions for out-of-network services. PPO, Preferred Provider Organization, plans allow more flexibility in choosing out-of-network providers, though these services typically cost more than in-network services. On the other hand, POS, point-of-service plans, require referrals from a primary care doctor to see specialists and generally provide less flexibility for out-of-network care. PPOS are known for offering better coverage for out-of-network services compared to POS plans. Question 8. Which of the following is a key feature of health reimbursement accounts (ETRAs) in employer-sponsored health insurance plans? A. ETRAs are only available for employees who do not have access to group health insurance. B. ETRAs are funded by employees, not employers. C. ETRAs allow employees to use tax-free funds for qualified medical expenses. D. ETRAs are required for all group health insurance plans. Answer. C. Explanation. Health reimbursement accounts (ETRAs) are employer-funded accounts that allow employees to be reimbursed for qualified medical expenses. The funds in HRA are tax-free, which provides a significant tax benefit for employees. ETRAs are not required for all group health plans, and they are typically designed to complement insurance plans. The employer controls the funding of the HRA, and employees cannot contribute directly to it. Question 9. Mr. Howard is self-employed and has purchased an individual health insurance policy. He is now considering how to reduce his monthly premiums. Which of the following would be an appropriate strategy to reduce his monthly premium costs? A. Enroll in a policy with a lower deductible and higher copays. B. Choose a high deductible health AHP and own a health savings account HSA. C. Switch to a Medicare Advantage plan. D. Increase the policy's maximum out-of-pocket limit. Answer. B. Explanation. One way for Mr. Howard to reduce his monthly premiums is by enrolling in a high deductible health AHP, which typically has low monthly premiums compared to other health insurance plans. Additionally, opening a health savings account HSA would allow him to set aside money tax-free to pay for qualifying medical expenses, providing both financial and tax benefits. A lower deductible would increase premiums, so option is incorrect, and switching to Medicare Advantage or increasing the maximum out-of-pocket limit wouldn't necessarily reduce premiums for an individual under 65. Question 10. Which of the following is true about the claims process in healthcare insurance? A. Insurance providers are not obligated to honor a claim if a healthcare provider submits the claim late. B. Claims are generally paid directly to the insured rather than the healthcare provider. C. Pre-authorization is required for all claims, regardless of the type of service. D. The claims process includes reviewing the provider's services, ensuring they are medically necessary, and verifying that the services fall within the plan's coverage. Answer. D. Explanation. The claims process in healthcare insurance typically includes reviewing the healthcare provider's services to ensure they are medically necessary and verifying that the services are covered by the plan. pre-authorization is often required for specific procedures or treatments, but not all claims require it. Claims are generally paid directly to the healthcare provider, not the insured, though the insured may receive payment in certain circumstances, such as when they pay upfront for services. Late claims or non-covered services may be denied, but the insurer is obligated to follow specific rules for processing claims. Question 11. MS. Carter is considering switching from her employer's PPO plan to an HMO plan for her healthcare coverage. Which of the following is key characteristic of health maintenance organizations? HMOS, that she should consider HMO plans provide the flexibility to see any healthcare provider without referral. B. HMO plans generally have lower premiums, but they limit coverage to network of providers. C. HMO plans allow out-of-network care without any additional cost. D. HMO plans cover a wide range of out-of-network services compared PPO plans. Answer. B. Explanation. Health maintenance organizations, HMOS, are known for having lower premiums compared to PPOS but require members to use a network of healthcare providers. One of the key features of HMO plans is that they generally require a referral from a primary care physician to see a specialist, and they do not cover out-of-network care except in emergency situations. This limits flexibility compared to POS but offers a cost-effective option for those who are comfortable with the restrictions. Question 12. Under the Affordable Care Act account, which of the following is true about essential health benefits (EBs) for health insurance plans offered in the marketplace? A. Essential health benefits must be covered by all health plans, regardless of whether the plan is a marketplace plan or not. B. Essential health benefits include coverage for cosmetic surgeries and procedures. C. Essential health benefits include preventive services such as immunizations and screenings. D. Health insurance plans that are not offered through the marketplace are exempt from covering essential health benefits. Answer. C. Explanation. Essential health benefits (EBs) are a set of 10 categories of healthcare services that must be covered by all health insurance plans sold through the account marketplace. These benefits include preventive services such as immunizations, screenings, and wellness checkups. Plans outside of the marketplace are generally not required to cover all EBs, and services like cosmetic surgeries are not considered essential benefits. The account ensures that all marketplace plans provide these critical health services to maintain affordable access to care. Question 13. Mr. Grant is eligible for Medicare and has recently moved to a new state. He is concerned about changes in his coverage. What should Mr. Grant do to ensure that his Medicare benefits continue seamlessly in his new state? A. Apply for a new Medicare Advantage plan in his new state. B. There is no need to take any action. The Medicare coverage is valid nationwide. C. He must reapply for Medicare Part and Part B in his new state. D. He should cancel his current Medicare Part D and re-enroll in a new plan. Answer. B. Explanation. Medicare benefits are valid nationwide, meaning that Mr. Grant's current Medicare coverage will continue to be valid even after moving to new state. However, if he is enrolled in Medicare Advantage plan or Part D plan, he may need to select new plan based on the coverage options available in his new state. While his basic Medicare coverage, Part and Part B, remains unchanged, the availability of specific Medicare Advantage or Part D plans may differ by location. Question 14. Which of the following statements is true regarding the Medicaid program in South Dakota? A. Medicaid eligibility in South Dakota is strictly based on income and does not take other factors into consideration. B. Medicaid in South Dakota provides coverage for people who are aged blind or disabled as well as low-income children and pregnant women. C. South Dakota does not participate in Medicaid expansion under the Affordable Care Act. D. Medicaid in South Dakota only covers emergency medical services for low-income individuals. Answer. B. Explanation. In South Dakota, Medicaid is a joint federal and state program that provides health coverage for low-income individuals, including children, pregnant women, and individuals who are aged, blind, or disabled. South Dakota participates in the Medicaid program but does not expand Medicaid under the Affordable Care Act account, which would have extended coverage to more low-income adults. Medicaid in South Dakota provides comprehensive coverage beyond emergency medical services, including preventative and ongoing care for eligible individuals. Question 15. Ms. Williams is considering purchasing a short-term disability insurance policy. What is a key feature of short-term disability insurance? A. It provides coverage for long-term disabilities lasting more than 1 year. B. It covers A percentage of the employee's salary for short period, usually up to 6 months. C. Short-term disability insurance pays for medical expenses only, not income replacement. D. Short-term disability insurance is available for anyone, regardless of employment status. Answer: B. Explanation. Short-term disability insurance typically covers a percentage of the insured's salary for limited time, often up to 6 months if they become temporarily unable to work due to illness or injury. This type of insurance is designed to provide income replacement for a short period while the person recovers. Long-term disability insurance, on the other hand, provides coverage for longer-term disabilities, often lasting a year or more. Short-term disability insurance does not cover medical expenses. It focuses on income replacement. Question 16. Mr. Parker's employer is offering group health insurance plan with both health savings account HSA and high deductible health PHP. What is one of the benefits of combining these two options? A. The employer will pay for all medical expenses that exceed the deductible. B. The employee can contribute pre-tax dollars to the HSA to cover qualified medical expenses. C. The THP offers low premiums but covers more out-of-network services. D. The HSA is only available to individuals who are enrolled in Medicare. Answer: B. Explanation. Combining a high deductible health PHP with a health savings account HSA allows employees to save pre-tax dollars in an HSA to cover qualified medical expenses. The HSA provides tax advantages, allowing individuals to contribute money on a tax-free basis and use it for healthcare costs, including those that fall under the deductible. HSAs typically have lower premiums, but they require the insured to pay a higher deductible before the insurance begins to cover a significant portion of medical expenses. The HSA is not available to individuals enrolled in Medicare. Question 17. Which of the following best describes the term medical loss ratio (MLR) as it relates to healthcare insurance? A. The percentage of premium revenue an insurer must spend on healthcare services for policyholders. B. The amount an insurer must pay in claims before a policyholder's deductible is met. C. The amount of profits that an insurer can retain after paying claims and administrative costs. D. The maximum amount policyholder can pay in out-of-pocket expenses during policy year. Answer A. Explanation. Medical loss ratio (MLR) refers to the percentage of premium revenue that an insurance company is required to spend on healthcare services and quality improvement for policyholders. Under the Affordable Care Act, insurers are required to spend at least 80% of premiums on medical care for individual and small group policies and at least 85% for large group policies. If insurers do not meet these requirements, they must pay rebates to policyholders. The MLR does not refer to claims, profits, or out-of-pocket expenses directly. Question 18. Which of the following is a feature of a preferred provider organization PPO health insurance plan? PPO plans require members to use a primary care physician for referrals to specialists. But PPO plans cover out-of-network services at a higher cost but allow access to those services. C. PPO plans provide no coverage for out-of-network services. D. PPO plans offer low premiums in exchange for fewer provider options. Answer B. Explanation. Preferred provider organizations (PPOs) provide members with more flexibility in choosing healthcare providers, including the ability to see out-of-network providers. However, PPO members are typically required to pay higher out-of-pocket costs when accessing care outside the network. Unlike health maintenance organizations, HMOs, PPOs do not require referrals from a primary care physician to see specialists, which provides greater freedom to manage healthcare needs. Question 19. Mr. Johnson has a healthcare insurance policy that includes a coinsurance feature. If Mr. Johnson incurs a $1,000 medical bill and his policy requires a 20% coinsurance, how much will he be responsible for paying? A. $200. B. $500. C. $1,000. D. $800. Answer A. Explanation. Coinsurance is the percentage of medical expenses that the insured is required to pay after meeting the deductible. In this case, Mr. Johnson's 20% coinsurance means that he will pay 20% of the $1,000 medical bill, which amounts to $200. The insurance company will cover the remaining 80%, or $800. Coinsurance is typically used to share costs between the insurer and the insured. Question 20. What is the primary purpose of the Consolidated Omnibus Budget Reconciliation Act (COBRA) A? To provide health insurance coverage for people who are not eligible for Medicaid. B. To allow individuals to continue their employer-sponsored health insurance coverage after losing their job or experiencing another qualifying event. C. To expand Medicaid eligibility for low-income individuals. D. To establish the health insurance marketplace for individuals and families to purchase insurance. Answer: B. Explanation. The primary purpose of COBRA is to allow individuals to continue their employer-sponsored health insurance coverage after losing their job or experiencing other qualifying events, such as a reduction in work hours, divorce, or death of a spouse. COBRA provides temporary continuation of health coverage under the same terms as the original employer-sponsored plan, but individuals must pay the full premium, including the portion that was previously covered by the employer, plus a small administrative fee. This allows individuals to maintain health coverage while transitioning to other forms of insurance or employment. Question 21. What is the key difference between a health maintenance organization, HMO, and a preferred provider organization, PPO? PPOS do not cover out-of-network services, while HMOs do. B. HMOs typically have lower premiums but less flexibility in choosing healthcare providers than PPOS. C. PPOS require members to have a primary care physician and referrals to see specialists. D. HMOs cover all medical services at no cost to the member. Answer: B. Explanation. Health maintenance organizations, HMOs, generally have lower premiums but require members to use a network of healthcare providers and obtain referrals from a primary care physician to see specialists. PPOS offer more flexibility by allowing members to see out-of-network providers and specialists without requiring a referral, but they often come with higher premiums and out-of-pocket costs. Question 22. Which of the following types of health insurance plans is most likely to require a higher deductible in exchange for lower monthly premiums? A. Health maintenance organization, HMO. B. Preferred provider organization, EPO. C. High deductible health per ISHBA. D. Medicare Advantage plan. Answer: C. Explanation. High deductible health initiations are designed to have lower monthly premiums but higher deductibles than other health insurance plans. These plans are often paired with health savings accounts, HSAS, to help cover the cost of the higher deductible. While premiums are lower, the insured must pay more out of pocket for medical expenses until the deductible is met. Question 23. Mrs. Taylor is considering enrolling in a Medicare Advantage plan. Which of the following is true about Medicare Advantage plans? A. Medicare Advantage plans are required to cover only the same benefits as original Medicare. B. Medicare Advantage plans are administered by the federal government. C. Medicare Advantage plans typically offer additional benefits such as dental and vision coverage not covered by original Medicare. D. Medicare Advantage plans do not require enrollees to have a primary care physician. Answer: C. Explanation. Medicare Advantage plans, also known as Part C, are offered by private insurance companies and must cover all of the benefits provided by original Medicare Parts and B. However, they may also offer additional benefits such as dental, vision, and hearing coverage that are not covered by original Medicare. These plans often include prescription drug coverage, Part D, as well. Unlike original Medicare, Medicare Advantage plans may require enrollees to have a primary care physician and get referrals to see specialists. Question 24. Mr. Lewis is enrolling in a Medicare Part D prescription drug plan. What is a key feature of this plan? A. It provides coverage for all types of medical services, including hospital stays and doctor visits. B. It is available only to individuals who have a Medicare Advantage plan. C. It helps cover the cost of prescription drugs not covered by original Medicare. D. It covers preventive services like screenings and vaccinations. Answer: C. Explanation. Medicare Part D is a prescription drug plan that helps cover the cost of prescription medications. It is available to anyone who is enrolled in Medicare, including those who have original Medicare Parts A and B or a Medicare Advantage plan Part C. Part D plans are offered by private insurance companies and vary in terms of coverage and costs. It does not cover medical services like hospital stays or doctor visits, nor does it provide preventive services. Question 25. What is the purpose of the Affordable Care Act's account of individual mandate? A. To require all individuals to have health insurance or pay a penalty. B. To mandate that employers provide health insurance to all employees. C. To limit the number of health insurance plans available in the marketplace. D. To eliminate the need for Medicaid by providing universal health coverage. Answer A. Explanation. The Affordable Care Act originally included an individual mandate, which required most Americans to have health insurance or pay a penalty when filing taxes. The goal of the mandate was to ensure that more people had health insurance and to spread out the cost of coverage among a larger pool of individuals. However, the penalty for not having insurance was reduced to $0 at the federal level in 2019, though some states have implemented their own individual mandates. Question 26. Mr. and Mrs. Jones are considering purchasing long-term care insurance. What is the primary purpose of this type of insurance? A. To cover the cost of medical procedures not covered by Medicare. B. To help pay for healthcare services related to serious long-term conditions like Alzheimer's disease or chronic disabilities. C. To provide coverage for hospital stays longer than 30 days. D. To assist with the cost of prescription medications for seniors. Answer. B. Explanation. Long-term care insurance is designed to cover the cost of services for individuals who need assistance with daily activities due to a long-term illness, disability, or aging-related condition. This could include home care, nursing home care, or care in an assisted living facility. It is intended to help people manage the high costs associated with long-term care that are not typically covered by Medicare or other health insurance. Question 27. Mr. Allen has just been diagnosed with a serious illness and needs extensive medical treatment. He is concerned about the financial impact of his treatment costs. Which type of insurance would best help Mr. Allen cover high medical expenses? A. Term life insurance. B. Disability insurance. C. Critical illness insurance. D. Dental insurance. Answer. C. Explanation. Critical illness insurance provides coverage for the diagnosis and treatment of serious illnesses such as cancer, heart attack, or stroke. It helps cover the medical costs associated with the illness, which may include surgeries, treatments, or other healthcare services not fully covered by other forms of insurance. This can ease the financial burden during a difficult time. Disability insurance, on the other hand, covers income replacement if a person is unable to work due to illness or injury, while dental insurance only covers all health-related expenses. Question 20. Mrs. Harrison is just enrolled in a new health insurance plan with a deductible of $2,500. If she has a medical procedure that costs $5,000, how much will she pay out of pocket for this procedure if her plan has an 80/20 coinsurance after the deductible is met? A. $500. B. $2,500. C. $3,000. D. $4,000. Answered. A. Explanation. First, Mrs. Harrison will need to pay the $2,500 deductible. After the deductible is met, her plan will cover 80% of the remaining medical expenses and she will be responsible for the other 20%. The remaining amount after the deductible is $2,500, $5,000 total cost. $2,500 deductible. The coinsurance means that Mrs. Harrison will pay 20% of this remaining amount, which is $500. Therefore, her total out-of-pocket cost for the procedure is the deductible plus the coinsurance for a total of $3,000. Question 29. What is the key feature of a flexible spending account, FSA? A. It allows employees to save money on a tax-free basis for any type of medical expense. B. It allows employees to set aside pre-tax dollars for healthcare expenses and has a use it or lose it rule for unused funds. C. It is primarily used for long-term care expenses. D. It provides a savings account for retirement expenses, including healthcare costs in retirement. Answer. B. Explanation. A flexible spending account, FSA, allows employees to set aside pre-tax dollars for qualified medical expenses such as copays, prescriptions, and certain over-the-counter medications. One of the key features of an FA is the use it or lose it rule, which means that any unused funds in the account at the end of the plan year may be forfeited unless the employer offers a grace period or rollover option. Question 30. Which of the following is a primary purpose of Medicaid? A. To provide low-cost insurance for families with children under the age of 18. B. To cover healthcare expenses for low-income individuals and families, including those with disabilities and elderly people. C. To provide coverage for people with employer-sponsored insurance who lose their job. D. To offer tax credits to help individuals purchase health insurance in the marketplace. Answer. B. Explanation. Medicaid is a government program that provides health insurance coverage for low-income individuals and families, including people with disabilities, elderly individuals, and pregnant women. The program is jointly funded by the federal government and individual states and aims to ensure that those who cannot afford health coverage have access to necessary medical services.